Yes, the public is going to want to buy the puts up at the highs like they always do, and this is where they're inflated, Mike, and you're absolutely right. They were deflated at all-time lows over here. And yeah, the put side went up to $18, and then the put came down to $8, and now the put is higher in the February $600 put than it's ever been. That's just one example. Let's take a look at the 595 put. Look at how inflated the 595 put is. Here, let's take a look at the 590 put. 590 put, they're all gapped up to the inflated area at all-time highs. And at the very same time in February, the 590 call is it too, right here. 590 call MMT is at its all-time lows and its all-time highs. And you know what we do best, don't you? We let people get stuffed in and they have to come down. And the thing of it is, people got stuffed up in here on the calls and they have come down. The difference between inflated, deflated, inflated, deflated, you can't stay one way here. You can't stay one way here. This is what makes a market. So as you can see what some of the puts have paid, here, 580 put. Look at this thing rocking from $5 up here to 13. And it's at its all-time highs. And that's a 580 put that was deep, well, it was well out of the money at the time. And it's right about where that strike is. Here is some 570 puts that went from all the way back up into the area. They could go a little bit higher, but not much. Whereas, why do we like the 570 call if we were to come down there and test like I did in the first video, is that these are cheap compared to the inflated put side of the market. So just going through some of the imbalances is what we're going to be focusing on. The 605 put that is now, so when you look at the 605 put way up here, I'm sorry, just like the calls, you got to come back down. Ha ha. So if that's got to come down, and this is a 605 put, let's take a look at the 605 call up and out of the money. Wow. I'm sorry. They were $44 on Friday. I'm sorry. They're now $560 on Friday's low. And what that means is that the imbalances are tradable. And that's a 605 put deep way up. And the call way down. So the old saying is short the top here and buy the bottom here. That is a preview of the call options on inflated, deflated at the strike prices for February. And most importantly is, why are you going to come out big? On an intraday level, if I were to steal 50 of these at 3.5 and sell them back at 7, that's not bad money. That's $20,000. How about that?